Hey guys, welcome back. So by viewer request, we're going to be doing a video on non-federally backed loans with regards to forbearance. What is a non-federally backed loan? How do you do forbearance with a non-federally backed loan? That's what we're going to be discussing today. My name is Jeb Smith. I'm a real estate broker here in Southern California. And if you're interested in all things real estate related, whether it's buying property, selling property, investing in property, or you're a homeowner and you just want to know how trending topics like forbearance might affect you, do me a favor, hit that subscribe button. And if you like the content, give me a thumbs up, as it helps more people see it and accomplishes my goal of helping educate buyers, sellers, and homeowners and navigating you through that real estate process. So what is a non-federally backed loan? So let's start by answering the question, what is a federally backed loan? So a federally backed loan is a loan that is backed by the federal government. Examples of that would be Fannie Mae, Freddie Mac, FHA, VA, USDA. Those are the main ones that people are aware of. Also, Ginnie Mae is one of those as well. So those are the main ones. Now, a non-federally backed loan, which would be a loan that is not backed by one of those agencies that I just mentioned. It could be a private party loan. It could be a hard money loan. It could be any type of loan that is not backed by one of those. And there's a lot of them out there. Essentially, a lot of jumbo loans don't fall into those categories as well. And so there's a lot of loans out there that aren't federally backed. Now, when it comes to the forbearance process, unfortunately, those non-federally backed lenders, servicers, the person you make your payment to each month, they don't have any certain requirements. They haven't been mandated as part of the CARES Act to give you any specifics when it comes to forbearance. Now, we do know with CARES Act, when they came out, they said that you have to allow forbearance up to 1 year. Now, that was only for federally backed loans. They didn't take into account any loan that is non-federally backed. And a lot of you guys have reached out to me to ask me to provide some insight on that topic, and give you some more detail. And while I've done a lot of research, unfortunately, there's no specific guidelines out there that tells you, this is exactly how they're going to handle it. It sounds like it's a case-by-case basis, but let's talk about what we do know so far. So if you do have a non-federally backed loan, or maybe you don't know if you have a non-federally backed loan or if it's federally backed, what I'll do is I'll link below to two different websites that will allow you to check to see if your loan is federally backed, through Fannie and Freddie, and also the mortgage registry system that allows you to check to see who your servicer is if you don't know that. And from there, you can probably figure out if it is federally backed or non-federally backed, but that's how you would start that process. But if you have a non-federally backed loan and you need assistance with regards to, paying your mortgage, and you've been affected, by COVID, whether it's a loss in income, unemployment, or what have you, the first step is calling your lender, right? Just like, whether it was federally backed or not, that doesn't change. The first step is making that call to your lender, to your servicer, whoever you make your payments to each month, and explaining your situation. At that point, they will go over specific options with you. Now, keep in mind, because they're there's no mandated guidelines that they have to abide by, each servicer, each lender that you call, depending on who you are, you might get a different forbearance option than, say, the next person that calls, or that has a different lender. Each lender should be somewhat consistent in what they're offering, but you might get some lenders that aren't on the same page with regards to the options that they're offering. But they should at least work with you. Now, the Federal Housing Finance Agency has come out, FHFA, and said that most servicers, most lenders of non-federally backed loans have said that they are going to follow similar guidelines as those that are federally backed. Now, they said they're going to follow guidelines. Now, what we know from viewers reaching out to me and talking with other people in the business is that a lot of these servicers aren't necessarily following those guidelines. So you're not there's not a checklist, right? Like there is with federally backed to say, hey, this is what they should offer you. This is the repayment options you should be given. This is how it should be handled, right? In this situation, it's a case-by-case basis. So you may have to provide documentation, whereas with federally backed, you do not. They may make you jump through additional hoops in order to get forbearance. But if you have been affected, chances are they are going to work with you in some way, right? Now, it may not be 6 months of forbearance or a year of forbearance. It may just be 3 months. And they could require you to make a lump sum payment at the end of that forbearance period. They don't necessarily have that same deferral option that, Fannie, Freddie, and FHA have come out with to say, hey, this is, going to be an option at the end. What they're going to do is, if you're granted forbearance, the one nice thing is that if you are granted forbearance or some sort of loan modification with regards to your non-federally backed loan, it shouldn't affect your credit, right? So that was one of the things in the CARES Act that said that, reporting to the credit bureaus should not affect your credit score, right? And so my understanding is that if you have a non-federally backed loan and you're able to work something out with that lender, that servicer, that the same thing should be true for you. It should not get reported negatively on your credit report, which is a huge plus. But with the repayment options, there's no structure, right? There's no guarantees that they're going to give you, all of the options. They might just give you the lump sum payment. They might just give you a repayment plan. They might just do a loan modification. There's no guarantees with that. So what I would encourage you to do is, find out who your servicer is, and try to do as much research as possible. I'd also, if you've talked to your servicer and you have a non-federally backed loan, I would love for you to reach out to me, either in the comments, email me, whatever, and let me know who your servicer is and what was offered, because that information helps me help other people. If I know that, the big servicers out there of non-federally backed loans are doing something, then I can pass that information along to someone else who may say, hey, look, I know you offered this to someone else. Is that an option for me, etc. So in this case, it's going to be more of a case-by-case basis, right? There's no guarantees, like I've mentioned many times, but the important thing is communication, right? I've said that in other videos with regards to this process. It's all about calling them, explaining your situation, letting them know that, if they give you one option and that option doesn't work for you, letting them know that. Letting them know that whatever they're doing is not assisting you, that you need further help. And if they give you 90 days and that's all they'll give you, then accept the 90 days. And at the end of that 90-day period, and if you need more, if you're not able to continue making your payments or pick up where you left off, let them know, right? It's avoiding the situation's only going to make it worse. And, not having that conversation doesn't mean you automatically go into forbearance, right? There's nothing at the moment that says, if you miss your payments, you're automatically put into forbearance, right? That is a conversation that has to be had, and the servicer as well as yourself have to agree on accepting forbearance in order to, for that process to start. So that's what we know so far. That there are other bills that are currently sitting out there that could get passed, that could affect non-federally backed loans, but at the moment, there's nothing on the table, right? So if you have a private party loan, a hard money loan, or what have you, they're in a different category than those that are federally backed. Now, if you want information on the federally backed loans, I'll link to that above so that you can get some more information on, what Fannie and Freddie are doing. And then I'll also put some videos in the description below for FHA and VA and what have you as well. So, again, if you have additional questions about forbearance, whether it's federally backed or non-federally backed, do me a favor, comment below, reach out to me directly. I'm here to help. I want to help. I do my best to answer all of your questions. And if there's something you want me to cover, do me a favor, give me that as well, and I'll do my best to put that information out and help provide some guidance on that. So I appreciate your time, I appreciate your support, and we'll see you again on the next video. Have a great day. Bye-bye.